Welcome back to Africa Rail and this coffee with the editor. There has been great excitement around the LeaseCo being done with Transnet and Transnet Engineering. There was a tender for the LeaseCo. It was cancelled for whatever reason, but you're going to give me the background.
Let me start from the beginning, Phillippa, how we first conceptualized the LeaseCo. The LeaseCo actually, the concept itself, started way before the rail reform. So we used to be part of the NEPAD Business Forum, and there was a lot of studies that were done on the North-South corridor, DRC all the way to our South African ports. And out of the many challenges we found in the studies that we did, the quickest way of solving not all the problems, but kind of getting started with solving the problem was ring fencing rolling stock. That's how we conceptualized this. So we sold it as business development to the executives, and it was decided that that would be under the custodianship of Transnet Engineering. They went to market, but unfortunately, people, we didn't have a solid business case. There was a lot of things we did not have answers to regarding the type of rolling stock we would make available, how much of that would be available, the structure of the partnership. So all of those, unfortunately, ended up resulting in us cancelling that first bite at going to market. And we're here. We've solidified a lot of things, and that's how we managed to go for an RFI about a month ago.
The other thing is, like, in terms of the LeaseCo, there's also been some changes in like the PFMA and all the rest of it that has, I think, also allowed this to move forward.
The PFMA has not necessarily changed, but we've been given departures as Transnet on how we procure. I mean, there's procurement for our normal operations. We're looking for pans, we're looking for water, and there's procurement for revenue. So they've allowed us to kind of deviate from the normal way of procurement. But because we are government, we still need to procure. Yeah. I think the most important piece of framework that I would like to mention is the fact that we have what we call a joint investment external partner selection process, which is what we affectionately call JIPS. JIPS allows us to engage with the private sector. So you could, as an example, just submit an unsolicited proposal. I now have a mechanism of going through that proposal and then deciding how best to respond to you. Do we go to market and look for other potential partners? How are they going to respond to the same? And we test the market, or do we do sole source confinement, whatever the case may be? So, and I suppose also that has also been cemented by the public sector framework that was approved by Cabinet in, I think it was in late 2023. So we're good to go. We now have, ways of engaging with the private sector so that they can partner with us. They bring the cash, we bring the expertise, we share the risk, and whatever the case may be, we see how to conclude on these partnerships.
Has there been good feedback and response 100%. From industry?
We held we had 2 briefing sessions last week. In total, minus Transnet's employees, there was over 200 people that were in attendance.
Has there been a lot of like local interest, or has it been mostly international?
It's both. In fact, there were more locals than internationals.
Okay, well, that makes a big difference.
It's exciting, I should think. Yeah. So we hope and see what happens when we close on the 4th of July. Yeah.
So what has been like the biggest concern from industry?
So the 2 questions that came out in the main were the role of Transnet Engineering. There are potential bidders that are asking, what if they have the same capabilities? And we are saying that's fine, that's going to be a source of negotiation, but you can't take away the resources that TE already has. You can't take away their footprint, you can't take away their experience. And when we say we're bringing our best foot forward as Transnet, we're bringing the rolling stock and we're bringing TE's capabilities. That's number one. It is not necessarily a deterrent. They just want to know, would they be locked to TE for the rest of the partnership? Yes. And the answer is probably not. But to expect a new entrant to emulate that kind of infrastructure, it's going to take us a while. That's number one. Yeah. The second question that they ask is, one of the requirements is you've got to have a net asset base of 4 billion. That raised, No.
And who has that?
People that join forces might get to that. But I suppose the point we're trying to demonstrate is that you've got to have skin in the game, because what we're starting is just the beginning of a bigger a leasing company. We expect to expand outside of the country. We expect to go international. So you've got to demonstrate those capabilities. We're not saying it should be coming from one source. We are saying as a collective, please kindly demonstrate that net-based asset of 4 billion rand.
So just run through how many locomotives?
So we have 21,000 wagons.
Yes.
It's a combination. And we also have about 600 locomotives, 34, 35, 36 Ds, as well as 18 Es. So that's what we're bringing to the table.
How many 18Es have you got?
Oh gosh, I can't remember the figure, but I think they're just over 100.
Okay.
That's over 100. But as a total, we have about 600 locomotives.
I'm going to take this like one step back, slightly controversial. Transnet Freight Rail can't move the tonnages that it wants to move because of locomotive availability, but you've got 600 locomotives.
That's a brilliant question, actually, and I'm glad you asked it. So what has happened is TFR has made a determination of where they want to play in the face of the rail reform. Because you've got to understand that they're not going to be the only train operating company.
Exactly.
We have a rail addressable market, circa 300 million tons. We've just done 160. So if you do a clean arithmetic, there's about 100 plus million tons that's up for grabs between TFR and other train operating companies, right?
Yeah.
So they've then gone and determined how much rolling stock will they need to meet their targets over the next 5 years. What we've taken is a combination of the B fleet, which is assets that are currently gathering dust, that TFR have never seen suitable, including the RSR, to be on our railway lines. The B fleet has never been utilized. This is what we deploy to the rest of the continent. So we've taken that and we're making it available. Over and above that, they've given us what they call the flexi fleet, which is for other commodities. And then TFR becomes our client. We then raise the capital to fix these assets for them so that they can put back on the line. So when we talk about our customer base, TFR is also our number one customer. So we haven't taken anything that they need to deploy elsewhere. We are then making it possible for them to fix these very same assets off their balance sheet through the LeaseCo and then put them back on the line.
And one doesn't consider that double dipping.
No, it's not double dipping. No, it's certainly not double dipping. Just like everyone else, they've applied for slots. Remember, TFR is a business. And if they were not a business, they would be getting support from government, which they're not. And the entire Transnet is not. What the rail reform has done is actually just slapped us in the back and said, hang on, there's competition out there. Best you wake up, right? So they're doing what every other business has to do. They have to fight for survival. They have to fight for customers. In fact, as we speak, we are capacitating the rail reform. We are sitting with an order book of over 11,000 wagons and over 100 locomotives coming from other potential train operating companies, not even TFR.
And that's the actual extent of rail reform, isn't it? It's like stimulating the economy, you're stimulating the manufacturing sector, you're moving
and meeting the demand with the right supply.
Exactly. I think that's probably the most exciting thing about all of this. Okay, so we're looking to financial close 18 months.
So financial close is in 18 months, but you do know that when the public sector procures, there's always going to be somebody that throws the spanner in the works. So we're mitigating. From when we got approval to establish a LeaseCo, we've started with what we call tactical leases. Tactical leases, we are now open for leasing these assets. As I've indicated, we already have an order book. We've signed off the contract with customer. I'll forever cherish them as customer number one. Hopefully, 10 years down the line, we'll celebrate them for having signed the first contract. And those contracts will be ceded to the leasing company at that point when we then establish it. Should it for some or other reason be delayed, we'll still carry on with the leases. Remember, we do have that experience. What we don't have is capital. We're leasing to Zimbabwe, we're leasing to Zambia. We're just growing and also getting a partner that has won the financial capabilities, that will open more markets for us, and that is probably much stronger in leasing. And obviously, an add-on to this would obviously be to bring some technological innovation into the equation.
One of the questions I've received is that, Transnet is already leasing. Why does this need to be such a standalone event?
We are leasing to Zimbabwe and Zambia, and that's a small fraction of what is out there. The beauty about the rail reform, people come, I tell you, and maybe it's because I'm entrepreneurial in terms of how I approach things, is that it has given us the opportunity to face the realities of survival. And we have to be innovative. And this is not a new concept for us, as I've indicated. It's just been propelled by the rail reform.
You guys have obviously done a study on what is required between like the 600 locos and the however many. How many wagons again? 21,000?
21,000 wagons and 600 locomotives.
Okay. You've been through the list. You know what each loco needs. You know which will be quicker, longer, which will cost less, cost more.
But yeah.
No, okay.
Yeah.
So a good majority.
So what we've done, Phillippa, is that every time we get a request, it gives us an opportunity to go on site to look at what is there with the customer. If the customer is happy, we do a condition assessment. We price. If we agree on pricing, they then hand over to TE if they want to use TE. If they want to use another OEM, it's entirely up to them. We sign on the terms. But we are going, for the purposes of establishing a LeaseCo, we're still going to do a proper independent valuation of the assets so that we know the market value as well as the condition of those assets, because that then prices the price tag of our contribution into the joint venture.
Let's just go back to Transnet Engineering, because listening to Bessie yesterday at the Transnet Engineering Industry Day, they're gearing certainly to deal with a lot of the refurbishments of these locomotives. I've been to Transnet Engineering on and off over the last couple of years. I've seen what was a full factory to an empty factory to actually a bit more busy than I've seen it for a while. This will have a profound impact. LeaseCo will have a profound impact for Transnet in total. What is your closing view on that?
I think LeaseCo, including the rail reform, is a wonderful opportunity for us to pivot our business. We've got to find innovative ways of surviving, right? And if you look at the LeaseCo and what it unlocks opportunities for TE from a refurbishment point of view. And probably later on new builds, because that's what we intend to do. We intend to bring new rolling stock at a later stage. It enables train operating companies to access the network. That's revenue for TRIM, right?
Absolutely.
The third piece of it is that you have train operating companies that are coming from outside of the country that are bringing volumes. So we also have volumes going to the port. So our entire value chain is bound to benefit from this. I think for me, what is important is to establish this as quickly as possible, because we also understand that we're not going to be the only leasing company. We also have competition to worry about, right? So I think it would have been a missed opportunity if we don't take this for what it is. It's an opportunity to grow the volumes, to get to the 250 target that the minister has set for all of us, not just for Transnet, but also if you look at it from a regional integration point of view, perfect opportunity to bring those volumes back to both Richards Bay and the Port of Durban.